The unit is here. Why the new BRICS currency makes $100 silver inevitable in 2026. Hey everyone, today we are diving deep into a topic that could change the way we think about money and silver in 2026. The new BRICS currency is here, and it has the potential to make $100 silver inevitable. But before we get into the numbers, let's understand what BRICS is and why their new currency matters so much. BRICS is a group of 5 major emerging economies: Brazil, Russia, India, China, and South Africa. Together, they make up about 40% of the world's population and around 25% of global GDP. For years, these countries have been talking about creating a new financial system that reduces their reliance on the US dollar. Now it seems their plan is becoming real. The new BRICS currency is designed to be used among member countries for trade and investment. This means they can buy and sell goods without using the dollar. Right now, the US dollar dominates global trade, but BRICS wants to change that. They want a currency that reflects the strength of their economies and gives them more control over their own financial destiny. So, how does this connect to silver? To understand this, we need to talk about currency value and inflation. When a new currency is introduced, it often causes uncertainty in the markets. Investors look for safe assets to protect their wealth. Historically, silver and gold have been the go-to safe assets during times of currency uncertainty. Silver has been undervalued for years compared to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently very high. This means silver is cheap compared to gold. When big changes happen in the global financial system, like the introduction of a new BRICS currency, silver often rises in value quickly. The BRICS currency is designed to be used among member countries for trade and investment. This means they can buy and sell goods without using the dollar. If silver becomes part of this new currency system, demand for it could skyrocket. More demand means higher prices, and this is why $100 silver is being predicted by experts in 2026. Another factor is the weakening US dollar. As more countries trade in BRICS currency, the demand for the dollar may decrease. When the dollar falls, commodities priced in dollars, like silver, tend to rise. This is simple supply and demand at work. The less people want dollars, the more valuable silver becomes as a store of wealth. But it's not just about demand. Silver has real-world uses too. It's used in electronics, solar panels, medicine, and many industries. The world is moving toward renewable energy, and silver is a critical component of solar technology. If BRICS countries invest heavily in green energy projects, silver demand could increase even more. History also supports the case for higher silver prices during major currency changes. Whenever countries have introduced new systems or faced inflation, silver has often surged. For example, during the 1970s, when the US faced high inflation and a currency crisis, silver prices rose dramatically. Something similar could happen with BRICS in 2026. Some critics argue that $100 silver is too optimistic. They say that market manipulation, government policies, and economic slowdowns could prevent silver from reaching this level. While these risks exist, the combination of a new global currency, commodity backing, and industrial demand creates a strong foundation for silver prices to rise. We also need to consider investor psychology. When investors see a new currency gaining traction, they look for assets that protect their wealth. Precious metals like silver and gold often attract this money first. As more investors buy silver, the price moves higher, creating a feedback loop. Furthermore, BRICS countries have significant gold reserves, but gold is expensive and limited in supply. Silver, being cheaper, becomes a more accessible option for both governments and individual investors. If BRICS encourages silver usage in their new currency system, it could trigger a historic bull run in silver prices. Global tensions and economic uncertainty also play a role. Political conflicts, trade wars, and sanctions make traditional currencies riskier. Silver becomes a hedge against these risks. In 2026, the world may see more uncertainty as BRICS implements its new currency, and silver could benefit as a result. Let's also look at historical ratios. The gold-to-silver ratio has averaged about 15:1 in ancient times, but is now over 80:1. This extreme ratio suggests that silver is undervalued. If the ratio returns to historical norms, silver prices could easily reach $100 or more. Technology is another factor. As new tech develops, silver demand grows. Electric vehicles, 5G technology, and green energy all use silver. BRICS countries are investing heavily in technology and infrastructure. This industrial demand will support silver prices while the new currency system rolls out. Another important point is supply. Silver mining has not increased significantly in recent years. Mining is expensive and new mines take time to develop. If demand suddenly rises because of the BRICS currency and industrial needs, limited supply could push prices up rapidly. We should also consider inflation. Many BRICS countries have faced inflationary pressures in their economies. A new currency could stabilize some aspects, but inflation risk may remain. Investors often turn to silver during inflation to preserve purchasing power, further supporting higher prices. So what does this mean for investors and everyday people? First, understanding the BRICS currency and its impact is crucial. This new currency could change trade, investments, and global economic power dynamics. Second, silver could be one of the best assets to protect wealth and potentially profit from these changes. Some experts recommend buying physical silver, such as coins or bars, to safeguard against currency fluctuations. Others suggest investing in silver ETFs or mining stocks. The key is to have exposure to silver before the potential price surge in 2026. It's also important to be patient. Markets can be volatile, and silver prices may fluctuate. But the long-term trend, supported by BRICS currency adoption, industrial demand, and limited supply, points towards higher prices. In summary, the new BRICS currency is a game changer. It signals a shift in global economic power and could trigger one of the biggest silver rallies in history. By understanding these dynamics and preparing strategically, investors and individuals can benefit from the inevitable rise of silver in 2026. The idea that a new BRICS unit currency makes $100 silver inevitable in 2026 stems from narratives of de-dollarization, where BRICS nations, Brazil, Russia, India, China, South Africa, plus new members, are building alternative financial systems, potentially backed by gold and local currencies, reducing dollar reliance. This shift, coupled with massive central bank hoarding of precious metals, gold and silver, supply constraints like potential Chinese export bans, and high industrial demand, solar, AI tech, creates a bullish case for silver, with some analysts predicting significant price jumps towards $100 by mid-2026 due to these combined factors driving physical demand and market disruption. Key factors driving the $100 silver narrative: de-dollarization and the BRICS unit. BRICS is developing a basket-backed settlement currency, part gold, part local fiat, to facilitate trade outside the dollar system, increasing demand for assets like gold and silver as reserves. Gold and silver hoarding. BRICS plus central banks have aggressively bought physical gold, creating a strong price floor, and are also accumulating silver to support the new system, straining physical supply. Supply shocks. Reports suggest China might ban refined silver exports in 2026, removing significant supply from Western markets and forcing price discovery upwards. Robust industrial demand. Silver is crucial for solar power and electrification, AI tech, adding substantial underlying demand beyond monetary factors, notes Yahoo Finance. Market manipulation and physical shortages. Allegations of paper market manipulation are countered by strong physical demand, with some funds struggling to take delivery of silver contracts, indicating real scarcity. What is the BRICS unit? It's a proposed settlement instrument for international trade, not an everyday currency. It's backed by a basket of member currencies in gold, example 40% gold, 60% fiat, reducing reliance on the US dollar for transactions, explains Forbes and Fisher Investments. It's part of a broader move to create alternative financial infrastructure, like the new development bank, to bypass dollar-dominated systems like SWIFT, say the Conversation and Investing News Network. Stay informed, stay smart, and keep an eye on the BRICS currency and silver markets. The future of money is changing, and silver could be one of the most exciting opportunities ahead. Thank you for watching.